Today, we'll finish our discussion on financial statements and ratio analysis. So far, what we have done was to go through some metrics, some ratios. We said that ratios are very important because it allows us to assess the performance of the firm, the operating performance of the firm. We look at the firm from several perspectives. Now, when we do ratio analysis, it's very important to realize that we do not look at ratios in isolation. We have to look at it from a certain context. Now, we mentioned two contexts. One context is in the context of time. We look at a ratio, for example, across time. We compare it with the previous ratio, the ratio of the previous time period. Okay, and not only across time, we also compare it across. We compare it with the benchmark, which is our direct competitor. Because a company does not operate in a vacuum, and we cannot say that a company is performing good. Okay, if we don't know, if we're not able to benchmark it against the performance of its closest competitor. We started looking at some ratios. We use the common size statement or vertical analysis in order to compare or to see how the account of a firm based on a particular metric. So for the common size statement in the income statement, we use sales as a metric. Okay, we compared all the accounts in the income statement to sales. For example, itong 0.824 na to, ano ba ibig sabihin yung 0.824 na yan? Well, that's the cost ratio. That's the cost of goods sold. Okay, ang bagal talaga ng computer ko. Cost of goods sold divided by sales. Okay, so we can look at that as 0.82 over 1, which means that for every 1 peso of sales, there's a corresponding 82 centavos cost, the cost of the goods that we sold. No? Okay, so we don't only look at it on a single time frame. We compare it to the previous period. Okay, we said that in 2020 relative to 2021, 2020 seems to be problematic kasi mataas yung yung cost ratio natin. In fact, if we take a look at the total operating cost ratio, in 2021, for every 1 peso of sales, we had 93 centavos of total operating cost. While for 2020, the cost ratio, the total operating cost ratio almost swallowed everything, no? For sales. Kasi 99 centavos, 99.7 centavos na ito. Practically everything, guys. So that's why net income in 2020 was negative siya, no? That's why the ratio, which we call the profit margin in 2020, profit margin is the net income after tax divided by the sales. It's negative. Siyempre, if the net income is negative, net income after tax, then the net profit margin would be negative. So it's divided by the sales. So we say that in terms of yearly performance, 2021 was a lot better than the previous year in 2020. No? And in fact, comparing also 2020 with 2019, we say that 2020, we had a very poor performance, no? Related to 2019 and even to 2021. Okay, so of course, during 2020, the company should have already assessed this, looked at what caused this, what was the reason for the breakdown in terms of the cost ratio of the company, in terms of the profit margin. So the ratios do not just stand there without the company analyzing really the causes of the poor performance of the company with respect to time. Okay, and not only that, this is benchmarked against a direct competitor. Okay, so it's important for the company to look at this in the context of what the competitors are doing. Okay, 1 minute, guys. I'll just take my medicine. All right. So benchmark against time and benchmark against the direct competitor. Okay, then aside from the common size statement, the vertical analysis, we also do the year-on-year analysis or the horizontal analysis. So dito guys, we take a look at the increase in the absolute value. So itong 70% na to is the growth rate from 2020 to between 2020 and 2019 of our sales account. So from 3432, it became 5834. So that's a 70% increase. So the increase in this period was even greater than the increase of the next period. From 5.8 million to 7 million, that was only 20.6%. Okay, we could, of course, we could say that this is good, no? 70% nung period ng 2019 to 2020 versus only 20.6% nung the following period. However, again, if we just take a look at this individually, masasabi natin mas maganda yung performance natin from 2019 to 2020. Okay. However, looking at this holistically, guys, we look at the other components. While sales increased by 17%, cost of goods sold increased by 73.9%, and total operating costs increased by 80.5%. Compare that with 20% nga dito, pero ang cost of goods sold natin nag-increase ng 16.5, ang total operating cost natin 16.3 lang dun sa 2021. Okay, so ibig sabihin, mas malaki yung increase ng sales relative to the other cost. Ito naman, mas malaki yung increase ng cost relative to sales. So, okay, yun ang problem guys pag titingnan natin ang mga ratios or ang mga metrics in isolation. No? This is a classic example. Dapat titingnan natin siya ng holistically. Okay? Okay, in fact, dito, our earnings before interest and taxes or EBITDA, operating profit, went down by 91.7. No? Ang laki ng binaba ng earnings before interest and taxes natin. From 209 naging 17. And primarily because of the huge increase in your total operating cost. No? So yung EBIT natin is not sufficient anymore to cover our interest expense. Okay, as you can see here. Hence, we have a negative earnings before tax. Compare that with 2021, okay? While the increase was only 20.6%, yet the cost of goods sold increase was maintained at a lower pace than our sales. Okay? In fact, our other expenses went down from 720 to 612. Okay, although depreciation went up, okay, because of the investment in fixed assets in 2020. We can see here that our net fixed assets increased from 344 to 939. Okay, so you look at these things holistically and try to weave a story, no? Kasi hindi pa pwedeng isang ratios lang. Tinitingnan natin yung relationship nito with the other metrics. Okay, relationship among the year-on-year figures, its relationship with the vertical analysis, etc. So we importante dito sa finance, tinitingnan natin yung as I mentioned a while ago, yung holistic story behind this and try to come up with reasons why this is happening. Siyempre, pag nasa company tayo, may alam natin yung mga reasons kung bakit nangyayari itong mga to, no? All right. Now, when we go to the common size for the balance sheet, we peg it with total assets. Yun ang reference natin. So, if we take a look at this, okay, tingnan natin yung quality ng assets ng company. Noong 2021, ang bulk ng ano natin ng investment is on current assets, no? 76%. 23% lang yung fixed assets. While in 2020, 67% yung current, 32.6% yung fixed. This was due to the huge increase in fixed assets in 2020. Okay, so ito lang yung galaw, no? Because of the huge investment in fixed assets here. Is that bad or good? No. Okay, because there must be a reason why the company increased its investment in fixed assets. This This is to spur or to support potential sales in the future. Okay, so siguro kailangan nila ng ang projection nila, lalaki yung demand for the product, lalaki yung share ng company. So they had to invest in assets, yung mga equipment for example, in order to support their projected increase in market share or sales. Okay. All right. So ito naman guys, well again guys, makikita natin dito na yung fixed assets natin, tremendous increase, no? Nagdoble talaga, more than double, almost 2 times. Okay, almost 2 times yung increase ng fixed assets natin from 2019 to 2020. Okay, so how about liabilities and equity? It's based on total liabilities and equity, which is the same as total assets. Dito makikita natin yung debt ratio. Okay, if we take a look at total liabilities in 2021, for every 1 peso of total assets, it was being financed by 44 centavos or 44% by debt. No? So 56% lang yung equity. Pero noong 2020, ang laki ng difference, no? Kasi noong 2020, the firm was really highly leveraged. Kasi noong 2020, 80% ng bawat piso ng asset natin, 80% doon or 81% came from financing by creditors, utang. 19% lang yung galing sa shareholders. And this is attributable to the fact that ang laki na increase ng long-term debt natin from 323 naging 1 million. So that's a 209% increase. Okay? Times 2. More than twice yung increase ng long-term debt. While yung equity natin, common stock, hindi siya nag-increase. 0% lang. From 460 to 460. That's why there was a marked increase in total liabilities. No? So sabi natin guys, may role ang liabilities, may role ang utang. Okay? It helps it leverages the company, yung operating performance ng company, yung we call the operating leverage and the financial leverage. Okay? It lowers the tax, yung paggamit ng utang. Okay? Aside from the fact that the use of credit is very important kasi baka insufficient yung funds ng company. So, hindi naman pwedeng sabihin lang ng finance, ay, wala tayong funds for that. So, hindi na lang tayo bibili, hindi na lang tayo mag-expand. Okay, that's a very poor reason for that. Kung pwedeng gumamit ng credit, ng utang, then by all means do so. For as long as na-maintain pa rin yung optimal capital structure. Okay, so then in 2021, medyo nagbago, no? Bakit? Ano nangyari? Well, anong nangyari guys, yung long-term debt natin, nagbayad si company. From 1 million, naging 500,000 na lang. Ibig sabihin, siguro may nag-due. No? So, nagbayad sila. Tapos, yung equity pa, from 650, naging 1680. So, there was a great, almost 3 times, no? Increase in the investment of the shareholders, 2.65.4%. While yung long-term debt natin, bumaba ng 50%. So that was the reason why nag-increase ng malaki yung natin, yung total equity, okay, vis-a-vis the debt. No? So ang contribution na lang ng debt 44% noong 2021 as against 81% noong 2020. Okay, so these are the things we can look at sa mga common size statement. No? Okay, now what we did last time was also to compute for the net operating working capital, for the TOC, investment in TOC, and also the NOPAT, net operating profit after tax. And these figures are important because we would like to assess whether the company was creating value for the shareholders in the form of, by the use of the metric ROIC. So here it turns out that ROIC is 13.4%, okay, which is greater than the weighted average cost of capital. Okay, so we can say here that value was created, and this is consistent with the EVA. No? Sa EVA kasi di ba ang ginagawa natin, Kino-compare natin two ways, no, using ROIC or using NOPAT. And we have our formulas here. Using ROIC, kino-compare natin si ROIC and the WACC. No? Okay, since ROIC is greater than WACC, we know that value was created. Unlike sa 2020, where the ROIC was a very poor 0.9%, so much less than the WACC. So we say that in 2020, the company destroyed value, but they were able to recover in 2021 where they created value. Okay, so and then we looked at the different ratios. We said that ratios can be classified generically into 5 types: liquidity, asset management, then we have debt ratio, profitability, and market value ratios. Okay, I think we reached up to, dun sa discussion ko na pinost ko, I think we reached up to TikTok. No? So let's discuss this. Let's have a very quick review. Okay, first, liquidity ratios. Pag sinabi natin liquidity ratios, ang minimeasure nito, it measures the capability of the firm to pay its current obligations as they become due. So we have 3 types: current ratio, which is current assets over current liabilities. So simple lang yung formula na yan. So how do we interpret 2.6? Ibig sabihin yan, for every 1 peso of current liability, the company has 2.6 pesos of current assets to pay its current obligations as it falls due. Now, is this good or bad? Again, i-relate natin sa previous years. This was much better than 2020. 1.5 lang kasi. No? So less capable yung company noong 2020 to pay their current obligations. Okay, so halos pareho lang 2019 and 2026, 2021 at 2.3. No? Now, but relative to the competitor, guys, sabi natin that the company, this is 2021 and 2021, so we're comparing the same years. So the competitor was a bit more capable of paying its current obligations, no, as it falls due. Kasi 2.7 yung current ratio nila. Now, a more strict measure is the quick ratio. Ang quick ratio, guys, tingnan nyo, yung current assets natin, hindi natin sinasama lahat. Tinatanggal natin yung inventory at saka prepayments. Okay? Yung 5 current assets natin, 3 lang kasama, only 3. Cash, marketable securities or short-term investments, and receivables. Because these are the most liquid assets. Okay? If we combine this, itong 3 to, and divide it by the current liability, that will give us the quick ratio. Okay, so si company natin, 0.9 lang, ano? 0.9, barely. Okay? So, barely, ano lang, a little less sufficient to pay its current obligations. Okay? But 2020, kalahati lang yung kaya niyang bayaran kung magiging due, no? Okay? And then we pale in comparison with respect to the our competitor kasi sila at level lang sila, no? For every 1 peso of current liability, they have just 1 peso of quick ratio. Okay. All right. Then lastly, we have cash ratio. Ito talagang pinaka-strict, no? Kasi ito cash line tinitingnan natin. Cash divided by current liabilities. Okay, so this might be a very, very strict measure. In fact, ito 1 centavo lang tayo dito, no? For every 1 peso of current liability. Okay, and this might be a very strict measure and maybe also a very unrealistic measure kasi it disregards yung other current assets natin. Especially kunyari may receivables tayo. A huge chunk of our current assets is invested in receivables, and yung receivables naman natin, okay naman yung quality niya, madali naman siya i-collect, no? Okay, so of course that can help, the collection of the receivables can help in paying our current obligations. Okay, so very strict tong cash ratio na to. Okay, and as I mentioned a while ago, it might not be a very realistic measure of liquidity, but we are aware that there's such a measure. Okay to guys kung a company does not really keep short-term investments or practically wala silang receivables. No? Pag ganon guys, then okay lang yung cash ratio na yan. But if a huge chunk, tingnan natin guys yung ano natin. Dito, okay, yung receivables kasi natin, ang receivables natin guys, that's 38% of our of our of the total asset. Hindi pala. Yan. Okay, our receivables is 25% of our total assets. So malaki yung percentage ng receivables natin. Si short-term investment 2% lang. So si cash natin, okay, 0.4% lang. And there's a reason why the company does not put too much sa cash, no? Okay? Kasi instead of putting it in cash, ini-invest nila yon sa productive assets. Okay? So yung cash na available, ipapasok nila sa inventories, no? Para makapag-generate pa ng profit. No use putting a huge amount of cash in the bank tapos hindi naman siya magiging productive kung ano doon lang siya, nakapark lang yung pera sa bangko. So ito, ini-invest nila sa inventories kasi ito yung mag-earn ito yung mag-generate ng profit para sa company. Okay? That's why I said that the cash ratio might not be a very, let's say, a sound metric kasi nga hindi iniiwan sa cash lang yung balance eh. Ini-invest yan sa sa inventories or even sa long-term assets, no? Okay. So just be wary of that, yung liquidity ratios natin. Next guys is asset management ratios natin. Ano ba yung asset management ratios? Very important ratios guys. So meron tayong tinatawag na turnovers, tsaka meron tayong tinatawag na days outstanding. Yung turnover natin guys and the days outstanding are related to each other. So what does inventory turnover mean? 3.9 times. Okay, so we call this we read this as 3.9 times. It means that in a year, the company is able to buy raw materials, convert to finished goods, sell the goods 3.9 times a year. So they do that 3.9 times. However, when we compare it with 2020, there was a deterioration in terms of the velocity to which the company was turning over its inventory. Okay, in fact, 2019 was better kasi 4 times siya a year. And then we fail very much in comparison with the direct competitor because the direct competitor does this 6.1 times a year. Ibig sabihin, they buy raw materials, convert to finished goods, sell. Okay, and they do that, they're able to do that 6.1 times a year. The higher the turnover ratio, the inventory turnover ratio, the better. Okay, because that means that the velocity of the operating performance of the firm is very fast and it's able to generate sales very fast. Okay, so now another measure of turnover is the receivables turnover. So what does the receivables turnover measure? It measures the number of times that the company is able to collect on its receivables. So from the sales on account, okay, then collection, company, XYZ company is able to do this 9.3 times a year. Okay, so after the sales on account, collect. That's one. After the sales on account, collect again. So 9.3 times a year. So likewise, guys, the higher the ARTO, receivables turnover, the better. So we say here that the company deteriorated in terms of the receivables turnover. Because for 2020, it was 11.9. For 2021, it was 9.3. No? And then comparing 9.3 with 10.2, the direct competitor performed better than the company. Okay, and then we have the payables turnover. Okay, so what's the payables turnover? The number of times a company buys its raw materials on account and then pays. Okay, so 13.6 times means buy raw material, pay, buy raw material, pay, buy raw material, pay, and that happens 13.6 times. While the competitor does this 15.1 times. So we'll discuss in a moment what's the implication of a higher APTO. Okay, now related to our turnover ratios are days outstanding. In fact, some would prefer the days outstanding ratios or metrics compared to the turnover. Okay, kasi mas madaling ma-interpret yung days outstanding. So the cousin or the brother of inventory turnover is days inventory outstanding or average inventory period. And how do we compute for this? This is this is indirectly proportional to your turnover. No? Ang formula natin dito, operating days divided by the ITO. So ano yung operating days? How many days a year does the company operate? So let's assume that this company operates all the days of the year, no? 365 days. So this one, we gave it a name. Okay, we gave this a name, Oper Days, 365, para madali natin magamit. Okay, so the DIO, days inventory outstanding, will be operating days divided by the ITO. So very simple yung formula. And what's the meaning of 95 days? Okay, 95 days means that it takes the company 95 days to buy raw materials, convert to finished goods, and then sell. So 95 days yun. So bumagal tayo nung 2020 kasi nung 2020, 73 days lang yun eh. Diba? Mas mabilis yung turnover natin, mas mabilis yung pagbenta natin, yung process na yun, okay, 73 days lang. Tapos, ba't talon-talo tayo ng direct competitor, no? 60 days sila. So what does that indicate? Tapos na nilang nabenta, okay, bumili ng raw materials, na-convert into finished goods, nabenta. Tapos na nila yun, guys, tayo, ano pa, 35 days more kasi 95 minus 60, okay, 35 days. 35 days, parang delayed tayo ng 35 days relative to the competitor. Okay, so this is really telling. Pag ganyan ba naman, if that's how we perform in the market, then surely, guys, surely we will be defeated black and blue by our direct competitor because they're doing their process so fast, no? 60 days. Now, of course, it's important for the firm to analyze why that's so. Is it because the competitor has invested in a technology or an equipment that's really cutting edge, and our equipment, our technology is really Jurassic? So that can be a reason. If that's the case, then shouldn't the company also consider doing capital budgeting and investing in the same so that it will spur its sales? So these are the questions that management has to answer. Based on the ratios. Okay, then we go to day sales outstanding. Day sales outstanding class is related to ARTO. And the formula is operating days divided by ARTO. So what does this tell us? If this is the number of times we are able to collect yung ARTO, the DSO is a number of days. Okay? Yung mga days outstanding, number of days yan. 39 days for the company after they sell to collect on the receivables. Okay? So again, nag-deteriorate tayo. In 2020, we were able to collect on our receivables on the average 31 days. Okay. However, take a look at our direct competitor, 15 days. Okay? Which means, guys, that after 30 days, saka dalawang collection na sila. Tayo wala pa. We have not yet collected because we will be able to collect on the 39th day. So this tells us about the collection performance of the company. Perhaps the company is not good in collecting its receivables. So maybe the collection team is not well trained to do that. Okay, so different considerations here because our direct competitor is performing this in 15 days. Okay, and lastly, guys, ito, days payable outstanding, again related to sa APTO natin. And what happens, guys? The higher the APTO, okay, what happens, guys? Wait, okay. 365 divided by. Okay, may mali yata ako dito, no? I'm sorry about this, guys. So let me let me just put this in because it should be the opposite, no? It should be the opposite. If this is 90, then that means, okay, so let me, it's equal to 365 divided by 90. So here, the APTO of the firm of the direct competitor should be 4. Okay, so apologies about this, guys. The APTO of direct competitor. So I had a mistake. Kasi na-carry over ko yata to, hindi ko nalagay yung formula, no? Okay, so if the APTO of the direct competitor is 4, that means if we divide this 365 divided by 4 something, okay, so that's around 90. 90 yung days payable outstanding. So what does this mean? From the time we buy our raw materials or supplies on account, we pay our supplier 27 days. Ito naman, yung direct competitor natin, they pay 90 days. Okay, ibig sabihin, guys, these are two things, no? Pwedeng number 1, the company is not able to pay on time yung direct competitor kasi 90 days yun na nakakabayad. Or the company is performing well so that they exercise control or power over the suppliers. So sinasabi nila sa suppliers, okay, you want to do business with us, then you should be giving us terms equal to, let's say, 90 days. Okay, so ganun, no? 90 days yung yung terms na binibigyan ng supplier. Kasi supplier forced to kasi sabi nila, well, gusto namin makipag-business with this company, no? Malaking company to and it will be a feather on our cap. Ibig sabihin that will be a good we can say to our other customers or would-be customers that our clients include this big company, no? Siyempre pag nakalagay din kunyari customers San Miguel Corporation kunyari or Ayala Corporation or Jollibee, ibig sabihin nun, that means that this company is able to do business with big companies which have very stringent requirements, no? So that can also work well for the supplier. Kaso nga lang, guys, yun nga lang, they have to live up with the 90 days, no? 90 days bago sila mabayaran. Okay? And then we'll discuss this in detail pa, no? All right. So given this, guys, either turnover rates or this days outstanding rates, we can now compute for the operating cycle. Si operating cycle, ina-add lang natin si DIO at saka si DSO. So when we add these two, that's our operating cycle. So what's this 134 days? 134 days means, guys, it takes the company 134 days to buy raw materials, convert to finished products, sell, and then collect. So this is what we call the cash-to-cash cycle. Cash-to-cash cycle. Cash-to-cash cycle or operating cycle. Bakit cash-to-cash? Kasi initially, maglalabas ng pera para bumili ng raw materials and then fast forward, makukolekta na nila yung receivables. Kaya from cash to cash, from cash out to cash in. Okay, 134 days. And again, guys, we do not evaluate this in a vacuum. We compare it with the previous year. So mas mabilis yung operations natin ng previous year. Pero guys, ito 75 days. Halos kalahati ng cash-to-cash cycle natin, yung direct competitor natin. So sila naka-second cycle na ng collection, tayo katatapos lang natin ng first collection natin. So how can we compete, guys, with a company that works that way? Tapos tayo 134 days yung operating cycle natin, tapos sila 75. Okay? That's a very, very big challenge for the company. So they have to really streamline their operations para bumaba yung days inventory outstanding nila, para bumaba yung days sales outstanding. Okay? Kailangan mas streamline pa nila para mas mabilis sila dito. And perhaps increase the days payable outstanding, which means that they have longer terms with their supplier. Okay? So this is very important, guys. I'll summarize this in a while. And then itong cash conversion cycle, no? Okay, cash conversion cycle, which is just your operating cycle minus your days payable outstanding. So let me turn to this diagram here para mas ma-appreciate natin. Okay, first let's take a look at the operating cycle or cash-to-cash cycle. Tingnan natin, guys, yung performance ni XYZ company. So we said that It took the company 95 days in order to ito yung ano nila days inventory outstanding, no? Buy raw materials, convert to finished goods, and then sell. Nabenta na nila inventory 95 days. And then after that, nabenta nila on account 39 days for them to collect on the receivables. All in all, 95 plus 39, yun ang 134 days nila. Okay? 134 days. And that 134 days is our, ang tawag, 134 ba? 95 plus, tama. 95 plus 39, 134 days. Ito yung cash to cash cycle natin or operating cycle. Okay. Now compare that with our direct competitor. Si direct competitor natin, number of days it takes them to convert to finished goods and then sell, 60 days. Number of days it takes them to collect on the receivables, 15 days. So all in all, ito, ang operating cycle nila, 75 days vis-a-vis our 134 days. Okay, so it will be very difficult, guys, for XYZ to compete with their direct competitor. And then, guys, sabi natin dito, ito yung ano natin, ito yung cash conversion cycle. Okay, ano yung cash conversion cycle? Ang question, kailan tayo magbabayad ng ano natin, ng payables? 27 days, no? On the 27th day, magbabayad na tayo on the average. Okay, now, kailan pa natin makukolect yung pera natin? On the 134th day. So, ano yung implication? Technically, wala pa yung pambayad dito. Dun sa sales natin, wala pa. Okay? 27th day, kailangan natin magbayad. So, what do you have to do in order to pay this? Maglo-loan tayo. Okay, so ilo-loan natin on the 27th day. Kailan natin mababayaran yon? Okay? Sabi natin on the 134th day, which is 107 days after we pay. So this is your cash conversion cycle, yung 134 days minus 27 days, 107 days. And that's the number of days for us to pay the loan. So, ibig sabihin, the longer the cash conversion cycle, the more interest expense for the company. Kasi interest is a function of time. So kung malaki yung cash conversion cycle, ibig sabihin, malaki yung number of days na babayaran natin yung interest. Okay? So 134 days. Right, that's the cash conversion cycle. That's why the lower the cash conversion cycle, the better. Kasi ibig sabihin nun, mas konti lang yung number of days na ipapa-finance natin yung payable natin. Okay. Now, what about the competitor? Bakit sila may negative? Ang ibig sabihin ba ng negative? Is it a bad cash conversion cycle? Well, taken into context, hindi, guys. Bakit? Okay? 60 days muna bago nila ma-convert into finished goods and then sell. 15 days bago mabenta. No? So that's 75 days. That's our operating cycle. Kailan daw yung DPO natin? Days payable outstanding, 90 days. Ibig sabihin, guys, by the 75th day, na-collect na natin yung receivables natin, kailan natin babayaran sa supplier? On the 90th day. So, ibig sabihin, meron pa tayong excess na 15 days to use the money elsewhere. Okay? Kung pwedeng i-ano sa marketable securities or invest in other kahit short-term na instrument para lang mag-earn ng interest. No? So magagamit pa natin yung amount by 15 days. So that's the implication of a negative cash conversion cycle. So is a negative cash conversion cycle good? Yes. Okay, yes. Because it means that the company has enough time to use its collected cash before they pay their suppliers. However, guys, taken to an extreme, may malaking question na dyan. Kunyari ito, no? Example lang. Operating cycle, 30 days. Ibig sabihin, nakolekta na yung cash from the customers. Nakolekta na natin in 30 days time. Tapos tayo, babayaran pa natin yung suppliers natin. Days payable outstanding, 180 days. Therefore, ang cash conversion cycle natin is 30 days minus 180 days. So that's negative 150. So, in a sense, guys, very good theoretically kasi meron tayong 150 days or practically 5 months in order to put the collected cash in an investment, earn from it, okay? Earn from it, and then saka natin babayaran. Okay? And some businesses do this. No? Sabi natin, kunyari, example, si SM guys, matagal magbayad dyan. So unless mahaba yung PC mo, guys, and mahaba yung cash flow ng company, then mahihirapan. But still, companies would want to do business there because of the traffic of the people going in, no? Sa mga sa mga malls. Kaso nga lang talagang challenging yun sa mga sa mga sa mga nagli-lease ng ng space. Okay, so a very huge negative cash conversion cycle. Theoretically, that's good. However, guys, sabi nga natin, from the perspective of a symbiotic relationship with your suppliers, okay, medyo mahirap to. Okay, so I think responsible business or yung katulad ng ginagawa ng Toyota, yung doing yung pool system, helping their partners to really earn along with them. Hindi yung push system na bahala kayo dyan. Ha? Basta kami kumita, wala kaming pakialam sa inyo. Basta yung mga customers namin nakakabayad and kami magbabayad sa inyo, kami sa inyong aming mga suppliers at this long time, at this DPO. Okay, so very important guys yung concept ng CCC. Kaya nga, medyo titinan dapat ng finance dito, yung business with the soul ba, kung titinan natin. So while the company is earning, should also take into consideration yung earning capability ng mga suppliers. And that's why importante din yung sinasabi nating triple bottom line, yung stakeholder management. Okay? All right. So let me leave that, guys, and I hope clear yung natin, yung measures ng days inventory outstand, yung mga turnovers natin at saka yung mga days outstanding natin. Okay, let me pause for a while, guys, and kindly chat if you have questions. Okay. If you have questions or kung wala, guys, kindly chat kung clear naman, clear so far. I would appreciate, guys, any feedback from you because I noticed that I have already spoken for the past 50 minutes, no, without let up. So pause muna ako just in case you have questions. Okay, salamat guys sa mga nag-chat. I hope everyone chimes in and gives feedback para alam ko kung okay naman so far yung Don't be ashamed, guys, if you have any questions. This will be included in our exams on Thursday. Thursday. Any more feedbacks, guys? Any more comments? Kung clear, kung pwede. Kasi konti pa lang yata yung nag-comment, guys. I would that 100% of the class give their feedback. Okay, so far, 4 pa lang, guys, yung nag-feedback ng clear. How about the rest? Kamusta naman sa iba yung pace natin? Yung discussion natin ng asset management. Okay, let's wait for your classmates. A few more comments, guys. I just want to be reassured na okay pa tayo so far. And please feel free to ask questions if you have any questions. Okay, thank you. A few more seconds, guys. Kasi 9 pa lang out of 18, no? So just 50%. Yeah, thank you. Okay, very good. Salamat, guys. Ha? Thank you sa feedback. Okay. Meron pa ba? I'm giving a few more seconds just for me to be to be apprised, guys, kung okay yung discussion natin so far. So this should be okay, 4.1 to, no? Kamali tayo dito. So I just changed, guys, I just changed the this value kasi mali yung kanina, no? Okay. All right. So thank you so much for your feedback. Okay, let's proceed, guys. Yung dalawang remaining na asset management. Our goal natin, guys, matapos tayo ng hanggang sa dulo. So we have practically 30 minutes. So okay, I have to 45, around 35 minutes. I have to accelerate a bit. FATO and TATO, guys, are also asset management ratio. Always base your assessment or analysis based on the formula. Kasi ito, yung FATO, guys, it tells us, but based on this formula, that for every peso of fixed assets, the company was generating 8.4 pesos of sales. So the higher, the better, di ba? Kasi ibig sabihin na utilize nila yung fixed assets nila, na optimize nila yung gamit. In fact, we were able to perform better than the direct competitor. Kasi si direct competitor 7, tayo 8.4. And we improved from the use of the optimal use of the fixed assets relative to 2020. No? Okay, that also goes for TATO, which is sales over total assets. Ibig sabihin nito, for every peso of total assets, the company was able to generate 2 pesos of sales. Okay, although we fail in comparison to 2019. Okay, and also we talo tayo, we fail in comparison also to the direct competitor kasi sila 2.5. Okay. All right, so that takes care of the asset management ratio. We now go to the leverage ratio or debt ratios. So ito, we discussed this already a while ago. And debt ratio is simply our total liabilities over total asset. So we said that medyo leverage tayo noong 2020, no? Kasi for every 1 peso of asset, 80 centavos of that were financed by financed by debt. Okay. Ito naman noong 2021, 44 centavos lang sa bawat piso ng asset ang naka-finance ng debt. Okay, may advantage, guys, and disadvantage yung mataas na debt ratio. No? One advantage is that it leverages the performance of the firm. A higher debt ratio means higher interest expense. No? Ibig sabihin ng higher interest expense, mas mataas yung tax shield natin kasi interest expense deductible yan. Okay? It decreases the taxable base. However, guys, ang two-edged sword yan, ano? Kasi ang mataas sa interest expense, it could mean, guys, that baka hindi makapagbayad yung company ng baka mag-default sila dun sa interest obligation sila. In fact, okay, si benchmark natin 50%. Now, is this better? Well, we can only answer that by saying na kung ano man yung capital structure that optimizes shareholder value, yun ang best, no? Okay? But here we might have a suspicion na pwedeng hindi nakita yun, ano? Yung optimal capital structure. All right. Now, in fact, kita dito yan, no? Sa TAI. Ano yung TAI, guys? Times interest earned. Take a look at the formula. EBIT divided by interest expense. Ibig sabihin nun, magkano ang operating profit natin sa bawat piso ng interest expense. Dito, guys, 10 centavos na lang. Ibig sabihin, hindi lang siya makakabayad ng interest expense. Akya tayo dito sa income statement. Okay, if we take a look at the income statement, guys, itong EBIT natin, no? EBIT divided by the interest expense, 10 centavos na lang. So hindi na niya kayang i-cover yung interest expense. While on the other hand, ito kayang-kaya, no? 502 divided by 80, so that's ilan 'yon? Yung time natin times interest earned. So that's Ito yon 6.28. No? So, comparing 2021 and 2020, sabihin natin mas kaya magbayad ng company ng interest expense from their operating profit. Kasi 6.28 pesos of EBIT, yun ang pambayad na kasama sa pambayad ng interest expense sa bawat piso ng interest expense. Dito, wala. Hindi natin kayang bayaran. Kaya nga nag-negative tayo dito. No? Okay. Compared to the direct competitor, 6.2 siya. Okay? So at par lang, halos at par lang tayo with direct competitor in terms of our capability in paying interest obligations. All right, EBITDA coverage. If you take a look at this formula, so that's EBITDA plus lease, no? Divided by interest plus principal plus lease. So yung formula na to, guys, yung numerator, this is the amount that's available to pay for the fixed expenses. Ano ba yung mga fixed expenses? Interest, principal, and lease. Yun ang mga fixed expenses natin. Ito, EBITDA. How do we get EBITDA? So, if we know the EBIT, we add back depreciation and amortization. Tapos, isama natin yung lease. Kasi yung total amount na yun, yun ang gagamitin natin pang bayad ng interest, ng principal, at saka ng lease. Okay, so it's important for us to understand this. So, tingnan natin muna yung 2021. Okay. Paano natin kinompute si EBITDA? Okay, dali. Okay, EBITDA coverage. F2. Yan, ano? Okay, so let me show you. EBITDA coverage means EBITDA muna, no? How do we compute for the EBITDA? It's EBIT plus add back depreciation. Okay? EBIT, then add back depreciation, and then i-add back natin si lease. Given tayo ng lease. Okay? Yung total amount na yan, ang available para bayaran natin si interest, si principal payments, at saka si lease. Okay. So that's your sum ng EBIT at saka DA at saka lease. Now, i-divide natin yung interest divided by ano yung mga babayaran natin na fixed. Number 1, interest. No? Okay, ito interest. Number 2, principal. Okay, paano natin malalaman kung may binayaran na principal? Ito, tingnan natin. Yung long-term debt natin, 500 ngayon. Dati, 1 million siya. Ibig sabihin, nagbayad tayo niyan. Di ba? Bumaba yung long-term debt natin from 1 million up to 500. Ibig sabihin, we paid the principal amount here. So ito yung principal payment natin. But if we compare 2019 and 2020, tingnan nyo, from 323 naging 1 million, ibig sabihin, wala tayong principal payment dito. Ibig sabihin nga, nangutang pa tayo. No? So yung formula natin, yung denominator, interest, principal, at saka lease, yun yung mga binayaran natin. So interest, interest expense, ano pa? Principal is the difference, no? So 1 million minus 500. Kaya ito yun, guys, no? 1 million minus 500. Ang binayaran natin, yung balance ng dalawa, yung 500. And then C44, which is our lease payments. Okay? So that's our EBITDA coverage. Ibig sabihin, magkano ang available natin para bayaran yung mga fixed costs natin. So tingnan natin yung formula, guys. Ha? This is your EBIT. This is your DA. This is your lease. No? Divided by, this is your interest. This is the principal payment. No? Okay? F9, yan. 500,000. Yun yung binayaran natin ng principal, control C. And this is your lease payment. So pag kinuha natin ratio na yan, 1.07. Okay? Ibig sabihin yan, guys, for every 1 peso of fixed cost na interest, principal, at saka lease, meron tayong available na 1.07 para bayaran yung fixed cost na interest, principal payment, at saka lease. Okay? While our direct competitor, grabe guys, 8 siya. Ibig sabihin, mataas yung EBITDA niya at saka possible na mataas din yung lease. No? Okay. But we really fail in comparison compared to our direct competitor. Although nag-improve tayo relative to 2019. Okay. Now, tingnan natin yung formula na to. Okay, ganun din, kaso tinanggal lang natin, guys, yung tinanggal natin yung principal payment. Bakit wala na yung yung minus natin? tinanggal natin siya kasi wala naman tayong principal payment noong 2020. Diba? If we take a look at our long-term debt, yung sinabi ko kanina, okay, we did not subtract itong E1, E31 by D31. Kasi hindi tayo nagbayad ng principal dito sa 2019 compared to 2020 compared to 2019. In fact, nag-increase nga eh. So ibig sabihin, nangutang pa tayo. Dito nagbayad tayo, no, 2020 and 2021. So that's very important, guys. Tingnan dapat kung nagbayad ba ng principal. Kung nagbayad, isasama dito yun. Kung hindi, wala tayong isasama doon. So ito, interest lang at saka lease. Okay? So 0.81. Of course, kinapilan natin dito yan. Sa ano din, wala rin, no? So pwede natin tanggalin na isang kama dyan. Okay? Or okay lang na meron dyan, ibig sabihin zero yan. Zero yung principal payments. Alright? Okay. Pause muna ako, guys. Okay ba itong debt ratio natin dito? Okay. I'm looking at the time. Medyo mag-accelerate lang ako ng konti. Any questions, guys, about the debt ratio? Any questions? Okay. Pakichat naman kung clear so far. Kung yes or no. Kung clear, guys. Okay, thank you. Okay, others, please. We have 25 minutes to cover the remaining parts. I would, guys, that mas mabilis yung natin, response natin sa mga queries. Okay, sige. Kung walang questions, let me proceed. Okay, profit ratio, guys. Profit ratio, yung iba dito na discuss na natin. Okay, let me just focus on the new ones. Number one, operating margin. Na-discuss natin to dun sa common size statement natin kasi ito EBIT over sales lang. So this tells us magkano yung operating profit natin for every peso of sales. So dito 7 centavos, no? Dito wala pa. Wala pang 1 centavo during 2021. Okay? Pero talo tayo ng direct competitor natin kasi sila ang operating profit nila 9 pesos per peso of sales. Tayo 7 centavos lang. And then profit margin, guys, mas strict. Ito, ang tinitingnan na yung net income after tax na. So take note of the relationship between the two. Siyempre, ang assumption natin dito, kung mas malaki yung EBIT, okay, EBIT is usually higher than your net income after tax kasi si EBIT hindi pa natin nababawas yan yung interest at saka taxes. No? Okay? So si net income after tax, usually it will be, lower than your EBIT. So your profit margin, ito na yung bottom line natin. So sa bawat piso daw ng nabenta ng company, 3.6 centavos yung kita nila. Okay? Malinis na kita na yan. No? Si 2020, okay, lugi pa. Sa bawat benta, guys, na 1 peso, mas malaki pa yung cost natin kaysa sa benta natin. And again, the direct competitor, almost doble yung kita nila. 6 centavos tayo, 3.6 lang. Okay? And then, itong mga iba na to, guys, okay, it just takes a look at your profitability compared to your total asset, total equity. Okay, tingnan muna natin si BEP, Basic Earning Power. So ito, ang kwento nito, magkano yung operating profit natin sa bawat piso ng total asset na invested by the company. Okay? Okay, here it's 0.14. So yung formula nito is just your EBIT divided by your total asset. So what does this mean, guys? Sandali lang, guys. So this means that for every 1 peso of asset invested by the firm, it was able to generate 14 centavos of operating profit. Again, there was a marked improvement compared to 2020, okay, but not so with 2019. Pareho lang. Pero again, talo tayo ng direct competitor natin kasi sila they're earning 18 centavos of operating profit for every peso of total asset. Yung return on assets naman, guys, ang ginagamit natin na numerator, net income after tax. Okay, and then we divide it by total asset. So pag sinabing return, guys, return on assets, pag sinabing return, ang ginagamit lagi niyan yung net income after tax. Except yung mga measures like return on invested capital where we use NOPAT. No? NOPAT ang ginagamit natin divided by the invested capital. Okay, so 7.2%. Anong ibig sabihin yan, guys? Again, for every 1 peso of total assets invested by the company, meron siyang kumikita tayo ng 7 centavos. No? Okay, so si 2020, as expected, kasi negative na yung net income natin, talo pa tayo. No? Okay, we're losing 3 centavos for every 1 peso invested in assets. And then again, talo tayo guys ng direct competitor natin. So yung mga what I'm saying is we're defeated by the benchmark company. It's not enough just to say that. What's important is to look at the operations of the business. Kailangan meron tayong environmental scanning yan. Look at what they're doing right. As I mentioned a while ago, is it because of new equipment that they're using? So they invested in this new equipment, cutting edge technology, which provides them less waste, okay? Less wastage of goods or raw materials. That's why they're more efficient. Okay, so things like this, it should cue in the management about why they're performing less compared to their direct competitor. Okay, and then we have EPS, no? Earnings per share. What does this mean? So we look at the net income divided by average number of shares, which means that for every 1 share, the company was able to generate 1 peso and 45 centavos of net profit. Okay, while the competitor was doing 1.85, 1 peso and 85 centavos per share nakita. Na take note, ang ginagamit dito, average shares. No? Now, bakit average shares? Now, this is especially relevant kung nag-increase yung number of shares. Okay? Dati, noong 2020, 1,000, tapos naging 250, di ba? Kasi nagdagdag ng capital, no? Ito, yung common stock natin from 460 to 168.80. Now, in practice, this is average kasi hindi natin alam kung kailan issue yung stocks na to. So, we assume that this is issued uniformly throughout the year. So, kaya ina-average natin yung 250 at saka 100. Okay? So, that's why in-average natin siya, okay, to get the earnings per share. Ito negative, guys. Ibig sabihin, nalulugi per share yung company, no, at 1 peso. Okay, next. Price earnings ratio. Ano naman to, guys? Ang tawag dito per price earnings ratio. Ibig sabihin, magkano yung presyo ng stock natin sa bawat piso ng EPS. Kasi ang formula nito, price per share divided by earnings per share. So sa bawat 1 peso na kinikita ng company per share, magkano yung value niya sa market. Okay, so the formula is, take a look at this, it's the price per share. Magkano na ba siya sa market ngayon? Ang price sa market is 12.17 divided by the earnings per share. Okay? So that's divided by 1.45. Kung mataas to, guys, ibig sabihin mahal. Mahal yung stock na yan. Kunyari, 50 pesos to. Ibig sabihin yan, in order for you to buy this stock, okay, you have to pay 50 pesos in order to get an EPS worth 1 peso. Remember, ang denominator natin dito, EPS. Ano yung EPS? Earnings per share. Magkano kinikita ng bawat share. Okay? So if this is 50 pesos, that means 50 over 1. So mahal yung stock na yan. Okay? So sino mas mahal, guys? Yung company natin or yung competitor natin? Mas mahal si competitor. 9.5. Okay? Ibig sabihin, you should be willing to pay 9.5 pesos to earn 1 peso per share. Okay? Now, there could be a reason why this is expensive. Kasi pwedeng mas in-demand tong company na to kasi mas magandang operating performance sila. So buyers are willing to pay more in order to get a share of this company. Okay? Now, yung per na negative, guys, it has no meaning. No? No meaning to. Okay, but naging negative tong per na to? Kasi look at the formula. it's price per share. Yung price per share, positive yan, no? Okay, divided by the EPS. Yung EPS pwede maging negative. Okay, so walang sense nung na negative na per kasi hindi naman pwedeng bumili ka ng negative na price na stock, no? Okay, so we just computed it here pero it has no meaning at all. So sabi ko dito, negative per has no meaning. Okay, and then lastly sa price sa profitability ratios is your price to cash flow ratio. Okay, ano naman yung price to cash flow ratio? Itong dalawang to guys, yung price to earnings at saka price to cash flow, parehong tinitingnan yan yung market price. Pero itong price to cash flow ratio, ganun din. Okay, it's also share price, okay? But this time our divisor is operating cash flow per share. So kailangan natin i-compute si operating cash flow, okay? And then divided by the average number of shares. Okay, so let me just show the formula here. How do we get the operating cash flow? Okay, una, price muna, no? Share price. So we have that share price, that's 12.17 here. Okay, ito, no? 12.17. Divided by the operating cash flow daw. Paano natin, guys, makukuha si operating cash flow? Remember ito, guys, remember, yung sa statement of cash flows natin, from the net income after tax, we add back depreciation in order to convert this into cash flow. This is what you call your operating cash flow. Okay? So dito ang mangyayari, net income after tax plus depreciation. Yun yun. Yung sum ng 13 and 7. And then divided by the number of shares. Kasi per share eh. Kaya dinivide natin ang average ng number of shares, 250 divided by and 100. Okay, so that's the formula guys for, okay? Ito yung share price divided by, this is the operating cash flow per share. Okay, so that's the formula. Okay, so ang price per cash flow natin, anong ibig sabihin nito? Magkano yung willing kang ibayad to get a 1 peso operating cash flow. Okay, so the higher the value is, the more expensive it is, no? Ito 5.7, 7.6, mas mahal si direct competitor natin. Ang sabi natin, may reason yan kasi nga investors are willing to pay more for this stock. Okay, kasi mukhang mas maganda yung performance niya. All right, lastly guys, dun sa ratios natin before we go to DuPont and Altman Z. Okay, meron tayong 15 minutes, kaya natin to. Okay, market value ratios. Actually ito, this is book value ratio, no? So ano yung nito? Ano yung ratio na to? It's just your total equity divided by the number of shares. Okay? So this is our total equity divided by the number of shares, yung 250 at saka 100. Tapos dito din, ganoon din. No? So anong ibig sabihin ng book value? Magkano daw yung value ng equity natin, no? Per share. Per one share, magkano yung value ng equity natin? Okay, there's a marked improvement, no? Dati 5.6 lang yung value ng equity. Ngayon, it's 11.3. So tumaas, maganda 'yon, no? Kaso talo tayo dun sa direct competitor natin. Kasi yung one share nila, ang value ng equity noon 13.6. Tayo naman 11.3 lang. Okay, and lastly, we have market to book value ratio. Ano naman tong formula na to? Dinivide lang natin yung market value per book value. So how do we get this? Okay. Market value natin is the share price, no? Divided by ano yung book value per share? Actually guys, pwede natin kunin na to, no? Itong book value per share, given na naman siya, na-solve na natin. So this is the value, magkano yung value natin ngayon? 12.17 ito. Stock price natin, market value, divided by the book value. Yeah. So it's 1.08. Okay? So dito, nagkataon na pareho lang siya, no? Kasi 6, that's the stock price last year divided by yung book value per share, which was 5.6. So turned out pareho lang, no? Yung market value natin. Okay, anong ibig sabihin nito? yung market value, okay, ng stock natin compared to the book value is just 1.08. So ibig sabihin hindi masyadong tumataas yung market value natin while our competitor had 2.9. Ibig sabihin mas mataas yung appreciation ng market value niya relative to the book value. All right, so that ends, guys, our discussion on your debt ratio, profitability ratios, and market value ratios. Okay, of course, guys, I'm going to post this for you to be able to review. Okay, we have 10 minutes to discuss itong dalawang to. Kaya natin to. Okay, yung DuPont, guys, it's just it was developed by a company called DuPont, chemical company yan. Dati kasi noong 1990s, okay, ang measure, ang pinaka-importanting measure is the return on equity, yung ROE. Okay, wala pa yung mga ROIC noon, wala pa yung EVA. Okay, so ang focus talaga yung net income after tax over total equity. So DuPont asked, how should we improve our ROE? Kasi ito yung tinitingnan ng mga shareholders, ng mga investors. So taking a look at this formula, net income after tax over total equity, if we multiply this by sales over sales and total asset over total asset and then reposition it, okay, i-reposition natin yung ratios natin, okay, naging net income after tax over sales, sales over total assets over total equity. So take note, pareho lang yung numerator, na bago lang yung denominator. Okay, reposition lang natin sila. And itong mga ratios na to, alam natin to. This is your profit margin, this is your TATO, and this one is something new, hindi pa natin na-meet to before. This is your financial leverage multiplier. Ang tawag dito, guys, is DuPont three-way analysis. Bakit three-way analysis siya? Sinasabi natin na our ROE can be decomposed into profit margin, TATO, FLM. So if you want to increase ROE, then you have to increase profit margin, TATO, and FLM. Okay? So case in point, guys, tinala natin itong si FLM. Kasi si FLM, financial leverage multiplier or equity multiplier, it's equal to total assets over total equity. So pinalitan lang natin si total equity dito ng total assets minus total liabilities, tapos dinivide natin ng total assets, no? So pag divide natin ng total assets, magiging 1 yung numerator. Yung denominator, pag i-distribute natin yung total assets, magiging 1 minus total liabilities divided by total assets, it's your debt ratio. Okay, here I'm showing you that pag tinaasan natin yung debt ratio, guys, ano nangyayari? Tataas yung financial leverage multiplier. So, ang implication yan, how will you increase financial leverage multiplier? Which we need to increase in order to increase ROE. One way to increase the financial leverage multiplier is to increase your debt ratio. Yun ang kwento niyan. Ibig sabihin pala, pag dinadagdagan natin si debt ratio, nag-i-increase din yung ROE. Yes. That's the implication there. If we increase the debt ratio, okay, ano mangyayari? Lalaki itong debt ratio. Mangyayari, liliit itong denominator natin, lalaki yung total amount natin. See, you can see these formulas, no? Tingnan nyo na rin formulas na to, guys. You can see that at 90% debt ratio, the financial leverage multiplier is 10. Pag 0 lang yung debt ratio natin, guys, 1 lang yung FLM natin. If it's 40%, then see, lumaki yung FLM natin. Okay? So that's the implication here. So kailangan natin pataasin tatlong measures na to, profit margin, TATO, and FLM in order to increase yung ROE. Kasi dati, ito lang yung tinitingnan nila. No? Now, meron pang 5-way analysis, guys. It's up to you to look at that, guys, internet. Ito 3-way analysis lang yung tinignan natin. Okay? So here, we're just going to prove here that increasing that your ROE is really a combination of your profit margin, TATO, and equity multiplier. Okay, si ROE, guys. Okay, alam natin yan na ito yung net income after tax over total equity, or we could have just copied it here. Andito si ROE natin, return on equity. Ito ROE natin, no? Yan. 12.8, negative 17.1. Yan, pare-pareho lang yan. Pero finormal lang natin. Okay? So let's break it down into profit margin, TATO, and equity multiplier. So you can either use the formula, okay? Dito ginamit natin yung formula na to, or you can just copy it here. Pwede natin i-copy dito, no? Profit margin dito, ito, 0.036, ito yon, 3.6. Okay? Lagyan ko lang ng ano to. Yan, negative 1.63, negative 1.63. Okay, so they're the same, no? They're the same. Si Tato guys, kinapi lang din dito or yung formula, pwede din naman. And then si equity multiplier na lang yung this is your total assets over total equity. Okay? So pinerform lang natin yung mga formulas and then multiply natin. So it's just the product of this times this times this. Okay? So the three guys, multiply natin, product function ang ginamit ko. It gives us the same value. Okay? So this proves guys that the DuPont formula is correct. No? In order for us to increase the ROE, kailangan dagdagan natin CPN. Kunyari, maging ano to, no? For example, if this became 4.6, then we know guys na, okay, anuhin ko lang to ha, gawin ko lang 4.6 to. 4.6%. Diba? Tumaas yung ROE natin. Instead of 12.8, naging 16.4. Just by increasing the profit margin. Balik ko na siya. Okay. So you get me guys? Pag tinaasan natin any one of these, profit margin, Tato, and equity multiplier, then our ROE will increase. Yun ang sinasabi ni DuPont. So kay DuPont, hindi lang ang focus yung itong formula na to. Ang focus niya itong profit margin, itong Tato, at saka financial leverage multiplier. Okay? And meron pa siyang 5-way analysis, no? Which I'll leave you to explore guys sa internet. Okay, lastly guys, yung Altman Z. Si Altman Z, ano siya, yung finance professor siya, si Edward Altman. Noong 1960s, nag-develop siya ng formula. This is what we call a discriminant analysis model na gusto niyang ma-predict kung magiging bankrupt yung ano yung mga companies within 2 years time. So, maraming iba't ibang klaseng Altman Z na formula. This is used for publicly listed companies kasi may market value added siya, no? Market value of equity. If it's private companies, wala market value yon. So, ang ginagamit dito, book value. Okay? So, let's just take a look at this formula. Okay, number one. Ito yung unang formula, no? Apat dito sa ratios, we use total assets as a divisor. Okay, isa lang yung total liabilities. So, number one, net working capital. Okay, ano yung net working capital, guys? It's your current assets minus current liabilities, no? Divided by total assets. So straightforward yung formula, no? Total current assets divided by current liabilities. That's your net working capital. Number two, retained earnings, guys. Meron na tayo sa income statement yan. Divided by total assets. Number three, okay, alam natin to, EBIT over total assets. Ano to, guys? This is your BEP, di ba? Ito yan. Basic earning power, yan. No? That's your EBIT divided by your total assets. Okay, meron na tayo yan. Or just follow the formula strictly. Okay, ito naman, okay, market value of your equity. So ano yung market value of equity natin? Share price multiplied by the average of the number of shares. Diba? That's our market capitalization divided by our total liabilities, C32. And lastly, guys, sales over total assets. Ano ba yung sales over total assets natin? Di ba? Tato lang yan. Yan, di ba? Okay, so sales over total assets. So Tato lang yan. 2. Alright, so once we have the ratios, guys, we will now multiply each with the factor. Itong mga factors yan, guys, fixed yan. Ha? That was determined by statistical analysis ni Altman. So pag in-multiply natin bawat isa niyan, we can use the sum product formula. Shortcut yung sum product. No? Ano yung sum product? Highlight natin yung array 1 and array 2. Ang gagawin ni Excel dyan, kukunin niya yung product, then isa-sum up niya. No? So that's our sum product. And it turns out that the z-score is 3.98. Okay. And then tingnan nyo guys, this can be a reference. Marami pa ibang references. Share ko lang sa ano natin, sa chat box natin, guys. Pakitingnan. Okay. Guys, marapit na mag-time. I have mga 2 minutes extension lang. Okay lang ba? May I have your permission to naghang. Hindi ko ma-copy. Ayaw niya i-copy. Control C. Ayaw niya mag Anyway guys, isasama ko naman to sa ano sa file na to. Ay mag-copy sa chat. Control C. Yan, okay. Alright, so yan yung site guys. Guys, permission guys, mga 2 minutes lang extension. Okay lang ba? It's 10:45 already. But if you need to go guys, okay lang. No? Anyway, ipopost ko naman to. But for the rest guys, thank you so much. Just a 2-minute extension. Pakita ko lang tong site na to. So ano ba yung Altman Z na yan? Okay, talagang mabagal talaga yung ano. So either mabagal na talaga tong computer ko or okay, so Altman Z, as I said guys, it's used to measure, it's used to predict, no? Predict if the company will become bankrupt or not. Ay, ayaw. Ayan, bagal. Okay, so dun sa site na pinadala ko sa inyo guys, okay? This is not it. Dun sa pinadala kong site guys, no? Yung may measure yan, yung Z measure. Dali. Oh boy, kailan tayo nagmamadali sa ano? Okay, and last na. Okay, last. And okay, so 3.98 yung score. So may meaning tong 3.98 na to, no? Tingnan nyo na lang guys yung site na to na sinare ko sa inyo. Dito makikita nyo ito na yan, Altman Z, a numerical measurement used to predict the chances of a business becoming bankrupt. Okay? So I leave you guys to peruse over this and read. Yung diagram lang papakita ko sa inyo. How do we interpret the model? Okay, saan magpakita ito? Yung diagram. Having difficulty. Yung diagram guys, from 0 to 1.8, pag yung z-score 0 to 1.8, ibig sabihin nun, ayaw mapakita yung diagram. Tingnan nyo na lang guys from 0 to 1.8, it means that a danger zone yan. Ibig sabihin magiging bankrupt. From 3 and above, ibig sabihin safe yung company. Between 1.8 and 3, that means it's a question zone. Ibig sabihin, hindi tayo sure, possible na maging bankrupt, possible na hindi. Okay, so that's what the Altman Z measures. Okay, so just go through this guys and kindly read. Okay, there are different types of Altman Z. Okay, so now I will just save this. Save ko na, tapos okay, and since okay, talagang mabagal guys yung internet. So ang gagawin ko na lang dito guys, ipopost ko na lang sa canvas natin kasi ang tagal kumilos, no? Okay, having difficulty. All right, so thank you so much guys. I'll just stop and okay, that will be all for today.